Hello and welcome to another Little Big View Trades and Tutorials video. In this video, I am going to take a look at some of the sector ETFs that may just be holding up against these levels. We're looking at a weekly chart here in the SPYs, and which ones you might want to focus on if the market is to stabilize and turn higher. All right. I'll also explain what this chart is down here, an aggregation of how the sectors are performing, which you can get free on our site. But before we get there, I want to make sure if you're just finding us on YouTube, that you know you can find not only this chart you're looking at right now, but lots of other videos like this and resources at marketgauge.com/tutorials. Additionally, follow us on Twitter. You can follow us at MarketGauge as well as at Market Minute. Both of them provide market insights, trade ideas, and a whole lot more. So with that, let's get right into the video. The chart you're looking at right here, which I'll show you in a second, you can find on our site for free, updated every week, is a weekly price chart of the SPYs, or S&P 500, represented by the ETF that represents it. And down here, you have an aggregation of how many of the sectors, major sectors, are bullish over a 6-month time frame. And as you'll read on this page, if you come here, if you have the number of positive sectors over 3, so you really want 4 or 5 sectors over 3, and the market over this blue line, which is a 40-week moving average, equivalent to the 200-day moving average, that's bullish. But if you get under the 200-day, that's negative, and it's even more negative when you have less than 3 or 4 sectors in positive 6-month territory. All right, so I bring this up for a couple of reasons. One, I'm going to talk to you about sectors that may be worth looking at in a market that might be at a good area to bounce. However, I'm doing that in an environment that is extremely negative. All right, so this is very anticipatory and could be extremely dangerous. So I'm not in any way suggesting, hey, all clear here, the bottom's in, time to run in and have a good time on the long side. Right now, you can find this because I'm not going to cover this in every video. You can always get this page. It's updated on Fridays. At least that chart is. It's at the bottom of this sector summary page, and you can get here, get to Little Big View by going to marketgauge.com, and then Little Big View, and then sector summary. Or if you just do marketgauge.com/sectors, it'll take you right here, or marketgauge.com/tutorials. That'll put you over here in the trades and tutorials section. All right, so what we do here is we track the major sector ETFs and how they perform on a daily basis, as well as 3-month, 6-month, year-to-date. This column right here is an extremely powerful column, a 6-month % price change. And as you can see, there's only one, XLU, that is in positive territory and not by much. All right. That said, it's been pretty flat. It's in an accumulation phase. If you want to learn more about that, there's help here as well. And this is actually one of the sectors that I'm going to look at. Another one which I featured in previous videos is XLP. I'm going to look at that too. This is pulled back with the general market. But notice over a 6-month period, SPYs are down 10%. If we look at some of the ones that are outperforming, although down, you've got XLP, which looks really interesting. And I'm also going to look at healthcare, which is down about the same, but you'll see why I find it interesting. And we're also going to look at another one. So that's not on this list. So let's just take a quick look at the charts. And I'm going to show you the charts in a view that we call the triple play indicators. All right, now, if after looking at this you find the triple play indicators compelling, it just so happens that Tuesday, tomorrow, January 19th, there will be a special, there's a reopening of an opportunity to get the triple play indicators if you go to marketgauge.com/holiday 2015. Now this will only be open until about 4 o'clock on January 19th. After that, that special holiday situation will go away. But if it will not only give you the triple play indicators, but teach you all about January trend trades. And one of the reasons that I'm going to focus on these ETFs right now is because we're in January, and January has some major trends that begin to form in January. And the bigger one of the two that we teach really is all set up, ready to go, starting next week. And here are some interesting looking ETFs, either from that standpoint or from the triple play standpoint, and from a purely technical standpoint. So here's what I mean. XLU. Now XLU is utilities, and utilities generally isn't one that I'd be all that excited about, with the caveat that right now it's incredibly compressed at the 50 and the 200. Now if we look at the triple play, this top triple play indicator is an indicator of price and price trend strength. So what you want to see with this indicator is the blue line, which is the shorter term measure of a stock or an ETF's true strength by itself, relative to the red line, which is a longer term measure, relative to the black line, which is an even longer term measure. The easy way to interpret this is if the blue line is up over the red and even better, trending higher, that's what you want to see. And oftentimes you will see this lead price action. So you can see this has gone nowhere, but in fact, internally, it is quite strong. Now on the downside, or on the, I shouldn't say the downside, on the lower indicator, you're looking at volume, a volume triple play indicator. It's not your normal volume indicator, but it's looking at the strength of the trend in volume. And you look at it the same exact way. If you've got the blue line under the red line, that's not what you want to see. And in this case, you can see, so the volume here is negative. We'd like to see them both be positive. Let's get back to XLU. If XLU breaks out to the upside over 44, that is a breakout that because of this you're going to want to follow. And while you may not have access to it, that could pull this back into positive territory, and then you'd have them both in positive territory, and that's what you want to see. So for example, here you had them both in positive territory as it broke over the 50-day or broke higher, and you can see the move moved higher. As they both broke down here, the move started lower. This is, and then back in here was the first time they both turned positive. So now volume has kind of trailed off here. That's not what we want to see, but a breakout here, you then look for the volume confirmation. XLU utilities, right? The feeling in the markets had been that rates were going to push higher. Right? That would be negative for XLU, and that has had a dampening effect on what had been a really strong trend in XLU. Now, what happens if the perception of rates shifts to we're not going to move higher regardless of what the Fed is doing? Then XLU could then become a favorable place, if nothing else, to hide in this market, and you could see a nice run up to the resistance in the 46 area. All right. Look, it's not I'm not a massive call saying this thing's going to break out and take out 49 and move to the upside, but in a really negative market, looking for a place that could have a nice trend, and who knows what happens to this market. This is a very interesting chart you should pay attention to. If for no other reason, it could be somewhat of a sentiment indicator, a confirming sentiment indicator on the direction of interest rates, right? So XLU, keep an eye on that one. Now, having nothing to do with interest rates, back to XLP. So you can see why, if you look at triple play, XLP has been mentioned here several times, because my point has been if it can break out above this 51 level, that's where you really want to get interested in it. Now it's back down to a key level, 48 key support level, still holding up much better than the overall market. Triple play price still looks good. I wouldn't buy it just because it's down here, but if it turns back up and the markets stabilize and turn back higher, and this thing can get back over, say, the 49 level, you've got a really interesting trade here with a basic buyer over 49 with a stop under wherever it puts in this low. So if it continues to go lower, stay away. If the market turns and this turns with it, this could be one of those sectors. I know I've said this before. Having said that, its pullback has been much less than the rest of the market. All right. So for example, over the last 3 months, the SPYs are down 6%. I'm getting this from the web page that we were just on. Last 3 months, SPYs have been down 6%. XLP has only been down 2%. So it's been a great place to quote unquote hide. But I also think that should the markets turn around, it's going to be a very good place to look for upside potential. All right, the next one, XLV. Now, the reason that I'm focused on XLV and bring this to your attention is because not only does it seem to have held the 66 level, which again is an important level technically. You could say it goes all the way down to the 64 level to round off, but 66, good place for it to hold technically. And Friday, when the market gapped down significantly, this held up. All right, so you've got an inside day on a day when the market was down big. That's a short-term indication that if you can get back over this level here, and certainly if you can get back over these levels here, again, just like the XLP trade, if this heads lower, I would not be a fan of it. If the market stabilizes and it starts to head higher, this could be one that could turn higher. Now, when you look at this one, you should also keep an eye on J&J. I think J&J is about 10% of this ETF. So you can see they look similar here. J&J, parenthetically, great place for this to have bottomed out. And if it gets back over its consolidation here, 99.25, and back over this black line, which is the 200, this is another one that looks relatively interesting if the markets turn higher. Now, finally, IBB is not on our list in the prior page that I showed you, and from a triple play perspective, it's still very negative. So in this case, any breakdown on here is extremely negative. That's what this is telling you here. It's also extremely negative because it would be breaking down below its August lows, right? So it's actually a leader on the downside, but this is one that I would keep an eye on for 2 reasons. If this turns higher, it could be a good indication that the market, at least for the short term, is done on the downside. So this would be an aggressive trade on the long side, but it's a good indicator in terms of the appetite for risk in the market. So whether you trade it or not, secondary to the first level you want to see this thing take out is roughly the 286 level, and then back over the 295 level. And if it can do that, then it's a positive indication for the market. And inside day on a day when the whole market went down, again, that's a really short term but powerful indicator that this could be ready to turn if the market turns as well. So hope that helps. Once again, you can find everything that you've seen here on our site at marketgauge.com/tutorials or /sectors. We'll take you right into that free little big view area. If you're interested in the triple play, then go marketgauge.com/holiday 2015. That's all for now. See you in the next video.